Thanks for joining us here on MacNicol. I'm Morella Fernandez. Ross Healy is on the show today and in-house, chairman of the Strategic Analysis Corporation, portfolio manager at MacNicol Associates Asset Management. He's here to take your questions on North American large cap stocks. You hear us how to reach us. Call us toll free, 1-855-326-6266. If you have an email question, you can send it to marketcall@bnnbloomberg.ca. Ross, thanks for coming in. So
My pleasure.
You just informed me that you were the very first Market Call guest. So, wow, you have a long history here.
That was a long time ago,
But they keep
Morella.
inviting you back. So clearly people like your advice.
Well, I hope so.
I hope so,
and I think over the years, generally speaking, I've given good advice, yes.
Sound advice.
Yep.
Okay,
Yep.
We are in very changing times, a time of upheaval with all the tariffs Donald Trump has now imposed again.
Yep.
I'm wondering what your take is on what is happening today, which is essentially we're hearing from the Commerce Secretary that could be carve-outs for Canada, perhaps the auto sector. We saw what the markets did yesterday. I'm wondering what you think of this very quick sort of turnaround to, hey, we might give you a break here and there, 24 hours after the fact.
Morella, I think I should sort of stand back a little bit here and say something that actually Andrew Coyne wrote in the Saturday Globe and Mail, and he said, "Look, we are facing a period of unknown upheavals, and given what Trump's done already, we're talking about upheavals that could go on for 4 years." Well, in the very short term then, what is it that we should be worried about? Well, as I say, I'm going to stand back from that and say, when I was looking at the market, and I'm now talking about looking at the market and making money, that's my interest and my curiosity. What Trump is doing in a short-term basis, outside of the fact that it causes wiggles in the market, doesn't mean a great deal to me. I look at the market, the North American markets, and I'm talking about the NASDAQ and the Standard & Poor's 500, and I have to tell you that the last time that those two markets got up to where they just were before starting off was back in 2000 when I started on BNN.
Are you taking a little bit of a bow for that?
No, I'm certainly
It's all you.
Not. But what I am saying is that the valuations in price to book terms, which is how we look at things, is back, or had been back before they set back a bit, to those levels. And technically and mathematically, they are very, very difficult levels to break through. In order to break through and get higher, you really would have to have a very strong economy, something happening that was extraordinary. Of course, what people were expecting or hoping was that artificial intelligence would do all that. Unfortunately, kind of like way back in 2000 when we had the fiber optic cables, people were building fiber optic cables like crazy and expecting them to be used. The problem is that it takes time to fill them up. And all of that AI stuff, they built these enormous platforms, or are building these enormous platforms. But I think that they're overbuilt, and like in 2000, we're going to have a sharp setback. And in 2000, the setback was big, and I think the same thing is going to happen again to AI, which will therefore mean that the economy is not going to be as strong as people expect. And if you then get Donald Trump mucking around on the side, it gets even worse. So you have.
So you see this as more of a natural correction happening.
This is, Meryl, this is exactly what it is. Yes, we're at an all-time high.
Yeah.
In 2000, we had an enormous correction,
Yep.
as you know.
So
I would expect something fairly large that happened this time too.
Okay, investors are going to have a lot of questions about that because
I hope so.
They're
Yes.
watching their money closely and they're
Yes.
seeing the bumps in the road. Okay, Ross Healy is our guest today, chairman of the Strategic Analysis Corporation, here to take your questions on North American large cap stocks. We'll line up your phone calls and be back in a moment. Welcome back to Market Call, and thanks for joining us today. We are going straight to your questions because Janet has sent in an email, and here's what she wants to know. It's about Berkshire Hathaway B share. She says, heeding your concerns, Ross, I have shifted away from the Magnificent Seven stocks, and I'm considering buying Berkshire Hathaway B shares. All kinds of people seem to think it's an excellent defensive value stock, and I'm wondering if you agree. Fair question today.
That is a superb question, and I'll have to say, very brilliantly timed, as it turns out. Now, I got to say to all you people out there in Never Land there, if you are holding Berkshire Hathaway B or Berkey B, as I think of it, put your mute on. You don't want to listen to what I've got to say. But if you are thinking of buying it, okay, or adding to it, then pay a lot of attention.
Okay.
Okay. Now, the first thing is that when we take a long look at Berkshire, going back to 2008,
Okay.
believe it or not, what we see is a beautiful long-term channel of valuations, and the stock has basically traded between its book value, as we measure it, and about 1.5 times book to about 1.6 times book value. And Marla, that's where it is today, at 1.6 times book value.
So excellent value.
Well, that means it's very, very, very expensive. Now, that's wonderful if you own it, but if you're thinking of buying it, what are you going to do? Well, a couple of things. First of all, be aware that the markets are very expensive. And Berkshire Hathaway, believe me, it goes up and down with the market. And it could well do the same thing. But you know, one thing that stands out for Buffett and Berkshire Hathaway is that he has about 1/3 of the portfolio in cash. Now, think about it for a moment. You are paying 1.6 times book value, and 1/3 of that is nothing but cash. Well, if I were buying cash, I wouldn't buy it at 1.6 times book. I'd want to buy it at book. So if I sort of recalculate what the Berkshire Hathaway stocks are worth, if I discount that cash down to par, okay, what I get is that the stock is 18% overvalued.
Wow.
So I've got some real issues there, and as they say, finally, the market's expensive. You add all of that stuff together, and you say, listen, look at what Warren Buffett's doing. Mm-hmm. He's got 1/3 of his portfolio in cash. Does that not give you a hint as to what you should do? No. And remember what Buffett says about cash. Okay, cash is a call on cheap stock in the future.
Yeah, that's also a good way of looking at it and a good way of putting it.
A very nice way of putting it.
Okay.
So if he is going to put off buying until the future, I think you could too. And if Berkshire Hathaway kind of, now it's the top of its channel, if it goes to the bottom or even partway to the bottom of the channel, you've got 25 to 45% or 40% downside risk facing you. I think you can afford to wait the same way as that Warren is doing
now. Okay,
yeah,
let's
wait
go to
for
the phones.
opportunity.
We've got some callers lined up for us. First is Faisal out of Toronto. Faisal, what's your question today?
Hi, good afternoon, Marella and Ross. Ross, I'm calling on TFI. It has fallen precipitously from the highs, and It continues to fall each day. Is there a floor you see at another point where you would be interested? And just a quick one, Ross. Were you the banking analyst for Dominion Securities in the 90s? And if you were damn good, my friend. I'll hang up and
Well,
listen.
thank you very kindly.
Was that in fact you?
The banking analyst. I was not actually the banking analyst there. I was the banking analyst at Scepter Investment Counsel there, and that's when I really learned how to deal with with banks. Learned a great deal about that. Okay.
So TFI is what you wanted to know about.
TFI, yeah.
Which is transportation. They've been in the headlines for wanting to move that headquarters to the U.S. and then backtracked on that.
Yeah, exactly. If we are going into a slowdown, if we're going into a recession, then probably TFI is on the expensive side of things. Sorry, I'm desperately trying to bring up my TFI chart. There we are. Lovely. Okay, the fair market. Okay, let's go by. First of all, I always start by looking at the quality of the balance sheet, and it's okay. It's not exciting, but it's okay. Secondly, what I like to do is like to look at the fair market value, or as we call it, the intrinsic value of the company. And the intrinsic value is 147. That's about 24% higher than it is now. So it's it's okay, but I can give you, and we probably will discuss in this program, a number of stocks that have a lot more upside potential than that. I think that the stock has an immediate downside target of 2 times its book value, which is about $100, and I would be prepared to. And that, by the way, it was a nice base before this big liftoff. So I think I would wait for that and don't be too much in a hurry to get back in here. Yeah.
Okay. We're going to have to take a quick break here on Market Call. Back with Ross Healy in a moment, lining up your phone calls and your questions. Back in a moment. Welcome back, and thanks for joining us here on Market Call. Ross Healy at the desk, taking your questions. Going straight to the phone lines, Terry on the line from Edmonton. Hi, Terry.
Good day, Ross, and good day, Umbrella. My question is on Bank of Nova Scotia. So would you buy Bank of Nova Scotia or TD or neither of them? Thank you very much.
TD's been a bit of a bargain lately.
It is, and listen, it's a good question because when you look at the bank stocks, the Canadian bank stocks I'm talking about, you should never look at them as a sort of a group and assume that they all trade together, because they don't. Okay, I have followed the bank stocks now for more than 50 years, and they have a very interesting pattern of that group, and it's kind of like don't know what you would call it, a cyclotron, like something that goes
like
around and round and round. Yeah, and you get stocks that are up here and are heading this way, and stocks that are here and heading this way. Well, who's up here? Well, Royal Bank, National Bank, and of course Canadian Western Bank, all are up here, and they're trading at a good premium to their book value. And then down below are Bank of Nova Scotia, Bank of Montreal, and the TD. And if you want to throw in, and I do want to throw in Laurentian Bank as well.
Okay.
These are the cheap ones, and they're the ones that are sort of on their way up, as the big expensive ones are kind of on their way down. So what do I think about Bank of Nova Scotia right now? I think it's a bank to hold. It had a nice run, and then it's got a little setback, but that's okay. That's the way that the banks trade.
Okay, and so Bank of Nova Scotia at 69.75 at this point today. But a good buy for you.
I don't mind down here. No.
Okay.
No.
Let's go back to the phone calls then, because we have another caller waiting on the line. That's Rob from Calgary, who has a question. Hi, Rob.
Hi. Thanks for taking my call. I'd be interested in hearing Ross's opinion on the TC Energy spin-out South Bow, or if he has a preference for the other pipes, such as Pembina or Enbridge. I'm thinking, given the current political environment, and your opening comments, are the pipes a good defensive play to a market correction or to Trump's tariff offense? Thanks again, and have a good afternoon.
Are they a good defensive play? I mean, he really wants the energy portfolio to move. So in that way, he's going to support that.
He wants Canadian energy, and if he can get it as cheap as he can, all the better. He reiterated his call for drill baby drill. And you know what American producers are doing? They're sitting on their hands.
Why?
Why? Because the prices aren't high enough. So you've got to get prices, I think, up over the 80, 90, and maybe even higher levels before it's going to get attractive again. My three favorite analysts who follow the oils and have done a really good job over the years, at least one of them is calling for as much as, hold on to your hat, $200 a barrel.
Okay.
Now, that's a bit on the excessive side, but if we got back up to 90 to 100, all of these oil stocks would do very, very well.
But OPEC is reopening in April, or it's going to start pumping more as it had promised to do. So how or why do we see oil consumption going up? I think we have to kind of look at it from a negative point of view. It's not so much that oil consumption is going through the roof, although cutting off Russia, that didn't help things at all, as the fact that there simply hadn't been enough exploration and development in the oil patch for a long time. So at this point, he's asking about Southwell. Would you invest then at this point, considering there's not a lot of new action, as you say?
Yes, I kind of like the oil patch, broadly speaking, and I think it's fairly low risk.
Is there a favorite that you have?
Well, in a sense, you kind of got to like the junior oils because they're like the junior golds. They're overlooked and people rush to the names that you recommend, like Suncor and Imperial Oil.
Okay.
But where do you want to go? You want to go to the guys that were left behind and are cheap. And there's a number of those junior oils that are down there and cheap.
And worthwhile looking at.
And very much worthwhile looking at, yes.
Great. Let's go back to the phones. Andre's on the line, and he's calling us today from the other side of the country at Chilliwack, BC. Hi, Andre.
Oh, hi, Morella. No Chilliwacks in British Columbia.
It's still the other side of the country from us.
Oh, okay.
Not the other side of the border.
Okay. So true. Oh, thank you for taking my call. Mr. Healy, I sure appreciate your comments. You're very consistent. Every time you come on, it seems that everything is overvalued and overpriced. I appreciate that. Could I get your thoughts, please, on Google and Mag 7, perhaps in general? What would you pay, please, for Mag 7 earnings going forward? What would you take Google as a price for an entry price?
Okay, listen, I'm going to back right off there, Andre, and say, first, I am not always negative. There are some things that I really, really love, and you're going to see some of those things when I have my top picks. But when it comes to the AI stocks, of which I include Alphabet, Google, as being one of them, I do have to point out that they are not only expensive, but I think that the AI infrastructure, those platforms, they are becoming vastly overbuilt, and they're not going to get the trade, the revenues from them to really make them very profitable. Just like fiber optics 25 years ago when I first came on here. And that's the case here. So I think that these stocks, broadly speaking, the AI stocks, are not only expensive, but I think that they're very risky. Now, Alphabet actually came off a perfect triple top. When you saw that little, right at the end, a perfect triple top that actually went back 20 years. And when it did, we had to say to our clients and our viewers, time to take profits. Are they going to be good even if they get into a bear market? They're not going to come down like that. I think they're going to come down in steps. And there's a potential step coming up here that's about $5 or $6 cheaper than the stock is right now. So he might get himself a little bounce. But do not confuse a little bounce with a new bull market in the stock.
Got it.
Okay, I think it's part of a broader narrative that the AIs are going to get
moving towards
wiped out.
Okay, wow. Okay, we're going to take a quick break. Our guest, Ross Healy, will share past picks, and we'll take a look at that. That's coming up next. Here's how to reach us if you have a question today for Ross. We're back in a moment. Thanks for joining us here on Market Call. We are here with Ross Healy, and we are taking a look at this point at past picks. Past picks from July 9th, 2024. At the time, you recommended Alamos Gold, which was trading at that point at $22.80. It's now up to $34.24, so a 51% return, 51% total return. Gold, of course, has taken off.
Well, it has. And by the way, Andre, if you're still listening, I'm not bearish on everything, and I happen to be bullish on gold, and actually gold and silver. So I would still like to hold Alamos. It's probably one of the two best run and managed companies in Canada. Okay, from a gold point of view, they have the among the very, very best reserves, and they keep finding high quality reserves. Finding new gold reserves is so difficult, Marilla, so difficult that when you actually can develop it yourself, it's wonderful. And that's what Alamos has been doing. Okay,
and they've done pretty well. All right, let's move on to Peyto Exploration and Development. At the time, so this again was July of 2024, you recommended it at $14.41. It's now up slightly to $15.30, so 6% return, total 13% return. They're natural gas?
Yep. That's a stock that I continue to like. You know, as we talked about earlier, I kind of like the juniors because they are cheap. And if things really get going, then they'll get going too. And if things don't get going, not much is going to happen to them. The stocks are good, is good value.
Okay.
So it'll hang in there.
Want to keep,
even has a bit of a dividend, so you can't whine about that.
Can't argue about that. Okay.
No.
Let's go to the next past pick again. Last year, 2024, in the summer, BCE in July was at 43.01. We know it has dropped to 34.33, a return of 21% and a total return of 16%. And a reminder that, of course, BNN Bloomberg, negative return, I should add. BNN Bloomberg is owned by CTV, which is owned by Bell Media. We're all one happy company here. So we know what's going on with Bell, but if you could expand on sort of what it looks like ahead, because people have been watching it drop and thinking, do I sell or should I hang on for a buck?
Okay. Oh dear. If I say anything positive, negative? Will the ceiling open up and lightning will strike me here? I don't know. When I recommended it last year, I was looking for a bounce in the stock, and we did. We got a quite. You can see that on the screen there. We got quite a nice little pop there. But subsequent to that time, everything has come unglued in their industry. The regulators and clients are saying, hey, we want prices down. We've got maybe potential competition from Starlink. Now that's of course that's rural, but nonetheless, we have to consider all of those sorts of things. And unfortunately, BCE is paying out too much in terms of dividends. And when I look at my charts of BCE, which actually tracked multiples of book value, it sort of it's in a downward channel. And I don't particularly like to buy companies that have downward channels for their balance sheets. And then, of course, I look at their earnings and their fair market value, and those are in sort of now. If I look at the fair market value, lots of upside potential. So could something good happen? Maybe, but it's got out of 3 potential strikes, it's got 2 against it and one for, and I would be cautious about BCE
at this point. Okay.
About this point, yeah.
All right, Ross Healy sticking around, take more of your questions when we come back. We're taking a quick break. We'll see you on the other side. Welcome back. Thanks for joining us on Market Call. Ross Healy's having a good laugh here in the newsroom. We're waiting to hear from Colin on the line from Sarnia, Ontario. Hi, Colin.
Well, hello, everyone. First, I'd like to mention and say to the BNN staff, you're holding up great and doing a great job in spite of all the crazy that's going on.
Thank you very much, because there's a lot of crazy going on. Agreed.
Yep, there sure is. Hey, Ross, I haven't watched your Fang Friday lately. Shame on me. And I'm sure you've talked about Nvidia, but I'm very curious what, in terms of intrinsic value and your other metrics, you see currently with Nvidia. I bought some at this level, and I'm very interested in your opinion.
Okay, Frank, if you bought some, you're not going to want to listen to what I've got to say. So you better mute your television set, because what I'm about to say is not all that positive. First of all, I was on here last year with John Ehrlichman, and I called Nvidia as an absolute sell. Okay. As an absolute sell. And I have not changed my view ever since, even with the little setback. The fair market value is 60% lower. The fair market value 60% lower than where it is today. And if you go back for the past, just about the last 6 years, what you notice a really fascinating pattern about Nvidia. It goes up, and then it pulls back to its fair market value, then it goes up, pulls back to its fair market value, and then it goes up, and what?
Yeah, we're looking at the 1 year, so all of the sharp declines, peaks and valleys there.
Yeah.
Currently
if you, as I say, if you go back 5 or 6 years, you'll see enormous swings.
Okay, we'll bring the 5 year up
in
well.
Nvidia, and that's precisely what we see. As I had said before, I think the AI stuff is overbuilt. The chairman of the company likes to overhype his own stock, and I mean,
that's what they do.
That's what they do, of course. They'd be surprised if he came out and said, "Oh my gosh, the end of the world is going to come."
Yeah,
no,
exactly.
Of course he's not going to say that. But the truth of the matter is, he may have a wonderful, wonderful, wonderful product, but it's got to be used. And the people who are making money using AI, there's not very many of them. There's lots of people making money selling the chips, but who is making money actually using all of this stuff? Who's using AI to invent something new?
Nobody.
Lots of people are sort of putzing around.
They're trying to,
they're trying
it out.
But they're not so far. So that is probably something down the road that we're going to see. It's it's like using all that fiber optic cable. Eventually, it all got used. Yeah. But in the first go around, it got way overbuilt, and then we got a big setback. And Nvidia is the kind of the Nortel or the Cisco of the AI movement. Yeah.
Okay. All right. Let's go back to
yeah.
We'll go back to the phones. Frank's on the line. He's calling us today from Toronto with a question. Hi, Frank.
Yeah, hi, Rose. How are you doing? Long time no see. Are you still holding Barrick Gold compared to other gold stocks? Barrick is not doing well. What do you think?
Okay, what's going on with Barrick?
Listen, Barrick ran into to a real meat grinder in Africa, and with the government, which was basically a military dictatorship, who wanted Barrick to cough up a heck of a lot of money.
Yes.
Well, I mean, military dictatorships need a heck of a lot of money. So they really went after. In fact, they even tried to arrest the chairman of the company. Well,
was that resolved in the end?
Well, I think Barrick agreed that they would pay some taxes, so that's helpful. But what it goes to show, Jim, is that there are some jurisdictions that are safe, that are good places to buy and own gold mines in, and then there are some that are not. And Barrick happens to, as I say, be in one which is it's not. Now they've got holdings, of course, in North America too. So that's and numbers of other places. So it's not the end of the world. And on that basis, then the stock is cheap enough so that not being the end of the world might actually make it not a bad buy at this juncture if gold keeps on moving, which I expect.
Got it. All right, let's move on to Jim, who's calling us from Elliott Lake in Ontario. Hi, Jim. What's your question today for Ross?
Yes, good afternoon. Ross, just a simple answer, I guess, on TD Bank. I guess some may still have it in the penalty box here a little bit, but your thoughts on it today and going forward.
Yeah, if I look at my very, very long-term chart of TD Bank, and again I look at that channel, what I see is that TD has actually just moved up off the bottom of that channel, and it's got a long way to go before it would get back to its usual high. So now I know that some people have still put it in the penalty box. And certainly the American regulators are watching this thing like a hawk, and even the Canadian regulators, of course, have to pay more attention. But this is a very well-run bank outside of having, as I say, made one nasty stumble in the States. But it's a very well-run bank, and I think that the quality and the value will come through nicely, and I would not be selling TD Bank at this juncture. Got it.
All right. We do have to take a quick break. Ross Healy will be back answering your questions in a moment. Stay tuned. Welcome back to the show, and thanks for joining us. We want to go straight to your phone calls and get your calls in as we can. Gordon on the line from Victoria, BC. Hi, Gordon. Gordon, are you still there? Okay, we may have lost Gordon, but he did have a question about Keyera.
Okay, Keyera is kind of right betwixt and between, and that makes a call difficult. Okay. It's actually right up against quite strong technical resistance, and it's also right at its fair market value. So when you've got no upside potential and you're up at technical resistance, good things have got to happen. And unless you can see good things ahead, Gordon, I think I would be very cautious about taking a position in the company right now.
What is technical resistance? What is that?
We are the mathematics that drive our work. Give us a series of actually modified price to book breakpoints in our work, and those breakpoints are very powerful. Okay. They have a tremendous tendency when you hit a stock to turn it back or bounce. The mathematics are quite interesting. So when we see a company that's right at one of those points, then what we tend to do is sort of, okay, let's sit back and see what can drive it, and to drive it through, you've got to have earnings, and you've got to have visibility of earnings. And unfortunately, with Keyera, what you see is exactly what you get. so I need something more. So, Gordon, I would be cautious. If it can bust above about $46, it will, by the way, that's the technical breakpoint, that will tell you that, hey, maybe something good is going to happen, particularly if the price of energy moves up as well to support it.
Got it. All right, let's move on to Michael, who's calling us today from Toronto. Hi, Michael.
Hello. Good to see you, Ross. I'm a dividend investor. I subsist solely on dividends, and I'm looking at Gibson Energy. How do you see it going forward? I'll hang up and listen. Thank you.
Yeah. Okay. Michael, hopefully you're there. You know, when I look at Gibson Energy, it's got some upside potential there as we measure by the fair market value, about maybe 28%. It has set back to technical support. But when I look at the overall chart, and again I'm looking at a 10-year picture of it, what I see is a company which is slowly, the balance sheet is slowly eroding.
Okay. And
then I look at the quality of the balance sheet. It's okay, but as I like to say, it doesn't make my socks roll up and down. That's for sure. So yeah, it's got a nice dividend. Unfortunately, it's not covered. At least the forecast is $1.54 for the next 12 months. Dividends $1.64. So that balance sheet is going to keep on eroding. So you got a great yield and an eroding balance sheet. It's not a fabulous combination. This is not an energy company that I personally would invest in.
all right, good advice there. Let's move on to Gary, who's also calling from Ontario from Napanee. Hi, Gary.
Hi to you, and thank you for taking my call. Well, I have a question here. It's on this company of Intel, which is a beautiful company that I follow here, and I bought into this company now to leverage on my stock, and I'd like to have your Bulls and Bears Luigi board thoughts on this company, because it just seems like that it goes up and hedges and then drops back down. I can't even make a table profit or nothing here.
Yep.
And how long do you figure that I'm going to be holding this company? Because I'm not in the position of wanting to sell and taking a loss.
Yeah.
Get out the Ouija board.
Yeah, get out the Ouija board is right. Here's the problem is that Intel is a company which I would describe as kind of being a day late and a dollar short. They did not get into the AI revolution stuff, or they're doing it belatedly, and I think their next strong release isn't going to be till, sue me if I'm wrong, but I think it's 2026. And in the meantime, not much is happening. It's not. You know, when I look at the fair market value, it isn't anywhere. This is a company which just missed the boat.
And it's hard to catch up.
And very hard to catch up, and you don't want to be catching up anyway when you're in a maelstrom of chip producers, which are all coming down this way.
Okay, so not a good time to jump in either.
Intel has been a nice trading stock, and we've been able to identify a couple of trading spots, but lately it's slipped away again, and this time around, I don't see the potential.
The upside there. Okay.
This time. Yeah.
That is all the time we have for your phone calls today, but don't go anywhere. Our guest shares top picks. That's coming up. Join us tomorrow on Market Call. Lauren Steinberg on the show, president of Lauren Steinberg Wealth Management, taking your questions on global value stocks and high-yield bonds. And if you miss an episode of Market Call, you can get it on our podcast. It's available iHeartRadio, Spotify, and other podcast platforms. Welcome back. Ross Healy is our guest today, and he is going to share some of his top picks, so you do want to listen to this. We are going to start off right now with something called Fortuna Mining, which is your first top pick that we have. Tell me what is interesting about Fortuna Mining.
First of all, I wouldn't be Ross Healy unless I recommended a gold and a silver stock. Okay. I'm very bullish on the area, on account of the fact, something I didn't say at the very beginning of the show, the quality of the U.S. balance sheet is really poor, and not getting any better. The 10-year forecast at present for the deficit for the U.S. is $5 trillion a year.
Yep.
Well, the balance sheet's not going to get any better. And if the balance sheet doesn't get any better, what is going to get better? Well, your alternative to currencies. And by the way, the global debt to GDP, the global quality isn't a lot better than the U.S. A bit, but not much. So
Fortuna's
I think
Canadian.
Yeah. Now, Fortuna, nice company. They had an acquisition of a gold company in the Côte d'Ivoire, the Ivory Coast, some while ago, and I see that an analyst who shall remain nameless has decided that he sees a wart in that, and of course we talked about Barrick and the problems of being in Africa, and he's extrapolated the wart to the entire company, and in doing so, he's pushed the company, the shares back down again. Terrific, because they're practically down to book value. Fortuna actually has probably one of the highest fair market value, intrinsic value targets that I have of all of the gold stocks. It's more than 120% higher than that. And I think was well on its way when it got bashed. Well, okay, you use these opportunities not to wring your hands and moan, but to do as Warren Buffett does, okay? Buy cheap stock. Thank you very much.
Take your cash and move it in.
Take your cash, yes.
Let's go to your next topic, which is Power Corporation. Tell me about Power Corporation.
Okay, it's got a nice dividend, and it's got terrific fair market value.
It's up 27% over the year.
Yep, it's up 27% over the year. It's now kind of up to a point where technically it's got to break out over one of our breakpoints. But here is a company, Paul Desmarais ran the company for years, and he ran it and he built it. And then he died and he passed it over to his boys, who decided that they kind of like being, I hate to say rich and man about town, but they didn't do very much for a long time. And finally, the shareholders got ticked off and said, hey, go and hire somebody. If you're not going to run it, then hire somebody who will. Okay. And they did. And this is now a story which is unfolding. And given how cheap the stock is, a big discount to its book value, given it's got a decent dividend and lots of upside, I think it's the kind of good value stock that probably would survive a Trump.
4 years in office.
Whatever, 4 years in office.
Trump term. Yeah. Okay. Yeah. Let's move on to your third pick then, which is Oceana Gold.
Okay. Again, I like gold companies that operate in stable countries, and Oceana Gold. That's certainly it. Secondly,
where do they operate?
They operate in Australia, Canada. I think they've got some in the Philippines, and some. Anyway, they're all places that we don't that we don't worry about. We don't see a military dictatorship descending and taking the gold. Secondly, they've got a heck of a balance sheet. It's really, really strong. And thirdly, it's trading at its book value. Well, okay, if I can buy a really cheap gold stock with a superb and stable production, what I've got is a company which is potentially very attractive as a takeover candidate. And you got to look at the big producers. It's really hard to find gold, but if you can buy gold cheaply, in other words, buy one of those little juniors there with lots of gold and a balance sheet to support it, you're basically buying their property for nothing.
Okay, so a lot of upside to that gold company, Oceanic Gold. We do have to leave the conversation there because we're out of time today. But Ross Healy, good for you to come in, sir. Thanks for joining us as well. 25 years on the show and still going strong. We appreciate it.
Marla, I have really enjoyed being on with you.
Good. I'm glad to hear that. And thank you for tuning in today for Ross's advice. We'll see you again tomorrow as we go a quick look at the markets as we head to a break. Take care.